In this video, we're going to be looking at the three financial statements that we're going to be talking about throughout the entire semester. Our income statement, retained earnings statement, and balance sheet. There's some important reminders that we need to look at before we get started. First, we must make sure that we're preparing our financial statements in the set order. We have to do our income statement first, followed by our retained earnings statement, and then lastly, our balance sheet. The last amount on each financial statement is going to be carried over to our next financial statement in order to complete it. Each statement needs to have a heading, which includes three important pieces: the company's name, the financial statement that's being prepared, and the time frame that the amounts included in the financial statement represent. The financial statement has two columns, a subtotal and a total column. On our income statement, our expenses are listed in order of greatest to least, with miscellaneous expense always coming last regardless of the amount. And our assets on our balance sheet are listed in order of liquidity, meaning how fast I can turn my assets into cash for me. So in this example, it says the amounts of the assets and liabilities of Wilderness Travel Service at April 30th, 2018, the end of their fiscal year, and its revenues and expenses for the year follow. The retained earnings were $145,000 at May 1st, 2017, which was the beginning of the company's fiscal year, and the dividends of $40,000 were paid during the year. Remember, a fiscal year is any 12 consecutive months that the company does their financial reporting, and it does not have to be a calendar year. So to get started, we have to start off with a heading. So the first piece is going to be the name of the company. So Wilderness Travel Service. Next, we have to list the financial statement that we're completing, which is our income statement. And third, we have to tell our reader what time the values in our financial statement represents. So in this example, they're telling us that it's an entire year of us running and operating our business. So we want to express to the external readers of our financial statements that the revenues and expenses listed below represent an entire year's worth of us running and operating our business. So we write for the year ended April 30th, 2018. What we start with is our revenues. We're a service business, so our revenues are represented by the account fees earned. It's representing how much we've charged our customers in fees for actually providing or earning those services. So they tell us in this problem that we have $875,000 in fees earned. That goes right into our total column since we only in fact have. The next one we're going to do is we're going to list out our expenses. Since we have more than one expense, we are going to give that section a title called expenses. And then we're going to list out each one of our expenses again in order of greatest to least, with our miscellaneous expense coming last. So we do have a miscellaneous expense of $15,000, a rent expense of $75,000, supplies expense of $12,000, taxes expense of $10,000, utilities expense of $38,000, and wages expense of $525,000. So our wages expense is clearly our most expensive expense. So we're going to list that one first. Again, it's going to go into our subtotal column since we have more than one expense. This is going to be followed by our rent expense of $75,000, followed by our utilities of our $38,000, followed by our supplies expense of $12,000, our taxes expense of $10,000, and finally that miscellaneous expense that we have of $15,000. Typically, companies list that miscellaneous expense last because it's seen as the least important expense, because it's kind of this catch-all account for smaller expenses that companies have incurred but don't typically incur. Unlike wages expense that they're going to incur every week, every month, this doesn't need its own separate account. So we're going to total them up to get our total expenses for the period, which is going to go into our total column. So during this fiscal year, the company incurred $675,000 worth of expenses to keep their business running and operating. Remember, an expense is the use of an asset. So it might be cash, it could be supplies, it could be prepaid insurance, whatever the case may be. So what we've earned in revenues, again, we earn revenues when we in fact have provided the service to the customer, regardless if we've received the cash, was $875,000. And the expenses that we have incurred during that same period was $675,000. When our revenues exceed our expenses, we have a net income. So we take our revenues minus our expenses, and we have a $200,000 net income for this period. That $200,000 net income, we are actually going to double underline to indicate that we are finished with that number on this financial statement, meaning we're not going to add anything or subtract anything else from that value on this financial statement. We are going to need that $200,000 value to finish our next financial statement, which is our retained earnings statement. For our retained earnings statement, we have to start off the same way that we do our income statement. We need a title, which again includes the name of the company. It includes the statement that we are doing. In this case, it's a retained earnings statement. And again, we have to include the time frame. So just like our income statement, we are going to write for the year ended April 30th, 2008. And what we want to start with is how much value we had in this retained earnings account at the start of our fiscal year. So our retained earnings as of May 1st, 2017, they told us was $145,000. That's going to go into our total column. There are two pieces that can change the value of our retained earnings, and that's our net income or net loss and our dividends. So when we're thinking about retained earnings, we're looking at how much of our earnings, meaning typically our net income, have we retained or kept in our business versus how much have we in fact given away to our owners. And those owners, of course, are our stockholders. And when we give something to our stockholders, we give it to them in the form of a dividend. So we did have a net income for the year, which we know is right on our income statement. So if we go to our income statement here, we have a net income of $200,000. We're going to pull that right into our retained earnings statement. We also paid out dividends. And dividends reduce how much we are retaining or keeping of our earnings. In this case, we've given something back to those that have invested into our business, our stockholders. In total, $40,000. So this is going to give us our change in our retained earnings. So we had $200,000, but we gave $40,000 away. So that means we are retaining $160,000 of our earnings during this fiscal year. So since this is a positive number, we're going to add this to our beginning balance in retained earnings in order to calculate our retained earnings as of April 30th, 2018, the end of our fiscal year. So at the end of our fiscal year, we have $305,000 in retained earnings. Again, we're going to double underline under that number to indicate that we're not going to add or subtract anything else to that value on this financial statement. But again, we're going to need that $305,000 in retained earnings in order to complete our next financial statement, which is our balance sheet. So over on our balance sheet, again, we know that our balance sheet is going to represent our accounting equation, and our accounting equation is our assets have to equal our liabilities plus our stockholder equity. Again, we started off with a title. We have the name of the business, the type of financial statement we're completing, and the one difference that we have in this title compared to our other two financial statements is that we don't write for the year ended April 30th, 2018. We simply put the last day of the fiscal year. We do this because our balance sheet is always a snapshot of where our assets, liabilities, and equities stand. I can't tell you how much cash I had throughout the entire year because it's constantly changing. Same thing with our liabilities. So we have to just show where those values are at the end of our fiscal year. So we're going to start off with our assets. And again, our assets are going to be listed in order of liquidity, starting with our most liquid asset, which is cash. Cash is already in its most liquid form. So we have $146,000. The next most liquid asset that we have is accounts receivable. It's the next most liquid asset because what we are in fact waiting to receive from our customers is in fact cash. We've already provided the service to the customer. We've already earned the revenue. We're just waiting for them to pay us. And finally, we have our supplies. Our supplies are assets to us until we use them to help run and operate our business. So we're going to sum those together to get our total assets for this period. And in total, we have $365,000 in assets. We're going to double underline that number because we're not going to add or subtract anything else to our total assets. Because again, our accounting equation is total assets have to equal our liabilities plus our stockholder equity. The next one is our liabilities. And our liabilities represent money or services that we owe to somebody else. So the only liability that we have in this case is our accounts payable. So it can go right into our total column. And we owe $25,000 for assets that we actually already have in our possession. We also have to look at our components of stockholders' equity. And there's two components of stockholders' equity. Common stock is the first one, and our common stock represents how much in assets have been contributed to our business in exchange for ownership rights. So when someone buys a share of stock and become a stockholder, they're contributing assets to our business in order to become an owner. The other component is our retained earnings. And remember, we're doing this as of April 30th, 2018. That's the snapshot date of our balance sheet. So if we look back at our retained earnings statement, we see that we actually have two retained earnings values. But again, our balance sheet is done as of April 30th, so the value we're going to pull over is that $305,000. We're going to add those together to get our total stockholders' equity for the period. In total, our owners are worth $340,000 in the business. We're going to add that to our total liabilities. So we take our $25,000 plus our $340,000, gets us to $365,000. It matches our total assets, which it has to do. So we have done things correctly. If it doesn't balance, it tells us that we might have done something or added incorrectly throughout the process.